joining us this morning, the renowned China economist Andy Xie, of course, former chief Asia chief economist at Morgan Stanley. Good to see you once again, Andy. 恭喜发财. It's been a few weeks now, but it definitely impacted those CPI figures.
Yeah, I think that inflation is no longer a crisis in China, but it's still a problem. The main reason is because there's a labor shortage, so the service sector price is rising pretty rapidly. And also Chinese people believe there's an inflation problem, so there's momentum. So I think that the government needs to be cautious, even though commodity prices are coming down. So that's causing this inflation pressure to ease, especially on the PPI side.
Well, the 4.5%, I guess I read that we got was actually higher than every economist that we surveyed. Was it higher than your estimates as well?
Yeah, I think that I don't try to guess which amount what the number is for each month. I think that the bottom line is that Chinese people believe there is an inflation problem, and I think
why do they believe there's an inflation problem?
Like they see like the prices in China have more than doubled in the last few years, and you look at whatever check out restaurants, and you can see that the prices in the last 3 years probably have doubled for most of the things that people buy.
Like vegetable prices, pork, etc., etc.
So I wouldn't pay attention to these monthly inflation numbers.
Okay, but we spoke to Goldman Sachs' chief economist Michael Buchanan earlier on. He does expect inflation. I believe the market consensus is that inflation will be coming down this year. Do you think that's a little too optimistic in your view?
I think that inflation is going to be a problem for quite a while. And I think certainly what the market thinks is an element, but for Chinese government, it's much more important is what the Chinese people think. The Chinese people think inflation is a problem. In this kind of environment, it's very difficult for China, the government to go out and print a lot of money. And if they do that, the exchange rate will come under pressure. So there are constraints to what the government can do.
Right. Well, I can tell you investors are a little concerned because what does this mean for easing? I mean, haven't the markets been pricing in more RRR cuts, maybe an interest rate cut as well? So what does that mean for what the government's going to do next?
Well, I think that in terms of normal monetary policy measures, people think about don't work very well in China. In terms of interest rate, for example, the interest rate market is mostly deregulated. People can find their own deposit rates, and in terms of lending market, the interest rate is much higher than the policy rates. So I think that in a notional cut doesn't really mean much. Triple cut is really to offset the hot money outflow, and China is experiencing foreign reserves going down.
There will be some this year, though,
yeah,
right,
of course.
Andy?
It's to target a monetary growth target. It may be 15% broad money growth target, but it's not really a form of easing, but it will be interpreted by the market as such.
Okay. It seems like the market is just saying, well, we're just going to disregard the CPI numbers for now, at least.
Yeah, well, we have seen such a market phenomenon several times in the past 3 years. So this is a risk-on trade, and people being on the sideline for a few months, then they feel antsy, they want to do something. So from time to time, we have this kind of bounce.
Yeah, that's right, and people need to make money for their investors, right?
Oh, for financial guys, they need to do something to justify their jobs.
Yeah. So what do you think? Is this year, this market is going to continue to rally for 2012?
I think that the market will peak when the QE3, the Fed's QE3 comes out. And this is, what's going on is the expectation of QE3. It's basically QE3 works by cheapening the value of money. So they're trying to force you to shift into riskier assets. So that's what we're seeing now.
But isn't this just talk? We were talking to Larry Fink yesterday. He doesn't think there's going to be a QE3, at least for this year. And a lot of people believe that the threshold is going to be pretty high for Bernanke to pull another round of stimulus.
Well, for the Bernanke, there's no downside. If the economy turns out to be better than expected, he doesn't have to do QE3. But if the economy is not as good, then the QE3 is just the right thing for him to do. So by promising QE3, he has no downside.
That's interesting. Okay, so what about stimulus? People are focusing on stimulus from China, really, considering the CPI numbers we got. You do expect RRR cuts this year. I want just to know how many you expect.
Well, I think there will be several rounds, and it could be 3, and who knows.
Right.
But the issue is that those triple R cuts are to maintain money growth rate.
Right.
When hot money came in, the government raised triple R to maintain the broad money growth rate at around 15%. Now it's the hot money is going out, so you do the other thing to maintain 15% monetary growth rate.
Right. And you don't even believe Chinese economic figures, do you?
I think that the economy is going to be now is very weak. We know it's very weak, and as I tour around China, a lot of factories are shut. We know why. Exports are not good, and property not good, and automobile not good, and local governments don't have money to invest. So those are half of the economy. So we're talking half of the economy are in trouble, right? So the economy is unlikely to to continue to grow rapidly. It's very difficult.
What's the latest there on the Greek stalemate?
Well, the latest, as we understand it, is that a deal may come later today, but the Greek pensions continues to be the sticking point. I'm curious whether the market will accept this deal, whether they think it's enough to get Greece out of its troubles.
Well, initially, I think if there is a deal, the response will be positive. But over time, we know that Greece has a huge competitiveness issue. Austerity will drive the economy down. They will make the debt look big again because the economy shrinks. So eventually, Greece will, if this is not last restructuring, Greece will come back.
And Greece isn't the only one that has a competitive issue, as you say. What would you say are the other country, the next country that you have on your watch list in the European area?
Yeah, it's Portugal obviously is an issue, but I think that for Italy or France, they are different. Any country with the larger globally competitive companies, this country has something, right? But if a country has nothing that you can remember, this country is in trouble in this kind of a world.
Looking at my notes here, it says you said that 2012 will be an extremely difficult year. Yeah. How so? The markets aren't behaving.
Well, I think
it's an extremely difficult year.
No, I think in January, I think with the Fed giving you QE3, so people kind of taking the bait, they want to play. But I think into a global economy is probably in recession now. The Europe is like the economy will contract by several percentage points, and Japan is in recession, and emerging economies are slowing down sharply. The U.S. is holding steady. I think this is basically a very weak global economy. But the stock market is not expensive, and the Fed is giving you something to believe in. So that's why we're seeing a rally.
What about the IMF warning on Monday that if Europe goes into a deep recession, which is possible, the contagion, etc., Spain, Italy, then China's growth will be halved?
Well, I think that China is very weak already. The Europe deep recession is a reality. It's not expectation. If you look at the exports out of Asia, you see that now Europe is in very serious recession. So this is why Chinese economy is pretty weak at this point.
So you would agree, and then by saying it's weak already, that's quite a rare comment to hear.
It's not. It's a fact.
How much would you say? 4% weakness for Chinese growth?
I think that it's very hard to say. I think you look at electricity consumption, right? Like in the last 10 years, it averaged about 12%, and I view that as an indicator of real economic growth. And in the last few months, it's slowed down sharply to maybe 6% or so. And I think that's what we'll be seeing this year.
You say it's weak already. I mean,
that's correct.
That one, is it? I mean, look at the credit concerns, the property bubble concerns.
Yeah.
Are those what you're looking at? Because looking at the main figure, 8% or thereabouts.
Well, Andy said that there was going to be a property bubble, right?
The bubble is bursting already. I think that for an emerging economy like China, it cannot be fine-tuned with a little bit of interest rate cut and so forth. There are big forces driving this economy up and down, and it could not be reversed by minor government actions. So what we're seeing now...
That's so interesting, because this week we were talking about how the central bank is loosening up and trying to help homeowners once again, but then foreign expats that can't get a mortgage to buy a home.
Yeah, I think that these measures are marginal. People will be talking about it. Think about it. China's got a 4.6 billion square meters of properties under construction, of which 3.6 billion residential. So how could a small change in financing policy is going to make a difference?
But they're also helping, local homeowners. If you can't get credit, we're going to try to get credit to you, because there is a bit of a credit crunch taking place right now on the mainland.
Yeah. Basically, the market was basically based on speculative demand.
Right.
So the price was very high,
right.
and the demand was very high.
Right.
Now, if you want to shift, if the bubble is bursting,
like, how do you know that the bubble has burst?
Because the prices are coming down, right?
Right.
And in Beijing and Shanghai, prices are coming down because there are buyers if you cut prices. But in a lot of tier 2 cities, if you cut prices, there's still no buyers. So
speaking of bubbles, you talked about how essentially this risk-on trade, this global risk-on trade, could be approaching a bubble. What needs to happen, though, to sustain this buying? We talked a lot about throughout the morning about how most of these indices have more or less hit that 20% from their lows.
Yeah.
What do you think needs to happen to sustain that?
Well, I think that we need fundamental reforms in the global economy. The West has a problem financing its living standard, so they need to adjust that. In the East, we do not have consumption, even though we have production. So we need to reform that. But this kind of rebalancing the global economy is very difficult, so it takes a long, long time. So the financial markets do not have that kind of patience. So from time to time, you have a story like what we're hearing now, Q3, the economic recovery, then people pile in, then you have a bounce. But we're talking about a multi-year transition towards a new growth model.
And this, it seems increasingly divergent growth model. Yesterday, Susan interviewed Larry Fink and talked a lot about the divergence of emerging economies from the developing world. And there's really no change in that scenario going forward. You said a multi-year process.
Yeah, in the last 3 years, emerging economies have grown rapidly. A big part of that is due to hard money inflow. Basically, it's a usual emerging market phenomenon. It's a bubble phenomenon, and it happened many times before. Liquidity from rich countries. I think that for emerging economies to create their own self-sustaining growth cycle, it's a consumption leading to investment, leading to job, wage growth, leading to more consumption, and that requires political reforms. And in particular, this is about China. China is at the center of the global economy, and if China does not restructure, the global economy is not going to recover.
And so, more challenging with the change in political leadership.
Yeah, I think that the issue is that the Chinese system is not into big reforms. It's more like a wait and see, and we might get lucky. That kind of governing philosophy. So I think it takes time.
Hey, Andy, a question for you. When are you ever going to work for a brokerage again? Independent economist. You've been this way for a few years now, 4 or 5.
Yeah, well, I think that the financial world is changing. I think that's lots of people do not appreciate that yet. I think that the 20-year financial boom, over 20 years financial boom, due to globalization, giving central banks in the West room to increase money supply because of a lack of inflation. Due to competition from emerging economies, this led to this vast financial bubble. It's deflating. So financial sector is going back to where it was 30 years ago.
30 years ago.
Yeah, so I think that a lot of banks do not know that yet. They need. They didn't need.
Now they do.
A lot of people are still trying to grow. They try to grow out of their problem, and that is not like it. They have to cut.
You're full of good news, aren't you, Andy?
Yeah. Andy, I'm sure a lot of people seek Andy's advice. Thank you again for stopping by. Andy's independent economist still.